Is the economy a vast, intricate machine, or is it more akin to a living, breathing organism? This question lays the foundation for our exploration today as we delve into the fascinating world of macroeconomics. In the heart of our economic ecosystem, two primary forces are at work: quantitative easing and quantitative tightening. They might seem like daunting terms, but they're just fancy ways of describing how money flows within our economy. Picture a serene lake on a calm day. That's quantitative easing. It's when central banks like the Federal Reserve in the United States or the European Central Bank pump money into the economy. They do this by buying government bonds and other financial assets, increasing the amount of money circulating in the market. This process is similar to adding more water to our serene lake, encouraging ripples of economic activity to spread outwards. A good example of quantitative easing was during the financial crisis of 2008. Central banks around the world initiated large-scale asset purchase programs to inject liquidity into the economy and stimulate growth. This action is like adding more water to our lake to keep it from drying up. Now imagine the same lake during a storm. That's quantitative tightening. It's the opposite of quantitative easing. Central banks sell their financial assets, effectively taking money out of the economy. The ripples calm and the lake's water level drops. This tightening is often a response to fears of inflation, where the value of money decreases because there's too much of it around. A recent example of quantitative tightening was in 2018 when the Federal Reserve started reducing its balance sheet after years of quantitative easing. It's like the storm passing and the lake's water level receding. Now you might be wondering, how does all this relate to cryptocurrencies? The answer lies in the correlation between the crypto market and the stock market. When liquidity is high due to quantitative easing, both the stock and crypto markets tend to flourish. Conversely, during periods of quantitative tightening, these markets can face increased pressure. In conclusion, understanding these macroeconomic concepts is essential to grasp the ebb and flow of the financial markets, including the burgeoning world of cryptocurrencies. The serene lake of quantitative easing and the stormy waters of quantitative tightening are key forces shaping our economic landscape. By understanding these concepts, we gain valuable insights into the economic currents that drive our financial destiny. So the next time you hear these terms, picture the serene lake and the stormy waters, and you'll have a clear understanding of what's happening in the economy.